Who doesn't love a great fireworks show? Let me ask you this though. What if silver's biggest move doesn't start with fireworks, but with silence? What if strength doesn't look like what you expect it to look like? What if strength was always there, but you just couldn't quite see it? Strength doesn't always look like a huge price spike. Sometimes it looks like refusing to fall when everything else does. Gold just had every excuse in the book to launch. Attack on Iran, Iran threatening retaliation, PMI numbers fell flat, inflation is still sticky. I mean, there was a classic safe haven setup, right? But instead, gold stumbled like a toddler learning to walk. And here's the part that's not getting enough attention. Silver didn't fall further than gold like it normally does. In fact, it barely moved. It held its position quiet and steady. Given everything that has happened and is happening in this market, that's not weakness, it's a signal. But Dr. Stacker, how can you be so sure? That's a great question. And the answer is in platinum. Because platinum already made its move, and the move caught almost everyone sleeping. And now silver is lining up to do the same thing. If you've been waiting for a loud breakout, you just might miss it. And as I shared in previous videos, you don't want that from silver right now. I'm going to give you 7 reasons why silver's silent strength might be some of the bullish things we've seen as stackers in a very long time, and why this bull market is going to look very different. What is good, Stackers University? It is so wonderful to have you here with me today. But before we continue, go ahead and hit that like button for me because I've got some fire for you today. Over 80% of you aren't even subscribed, so don't let me disappear from your homepage. Go ahead and subscribe while you're at it. We're going to sprint through reasons 1 and 2 because I've mentioned these in the intro. Reason number 1, silver didn't follow gold down. Most of the time, silver is the little brother. Gold moves and silver tries to match the movement, but it can't. It typically doesn't go as high and drops much further, but not this week. Gold softened by nearly 8%, while silver was pretty much flat, quiet, unbothered. In fact, over the last month, gold is down 0.7%, while silver is up 8.83%. This is price action we just can't ignore because price is often a reflection of market psychology. And when the market doesn't do what it typically does or what you expect it to do, well, that's a good time to stop and ask why. This week, and especially over the last 30 days, silver said, I'm not playing by those rules anymore. Remember this point because I'm going to go into the greater detail in a few moments. Reason number 2 is gold has so many great reasons to rally and somehow it didn't. And here's what makes it even more unbelievable to me. While Jerome Powell was testifying in front of Congress, playing it cautious, basically saying we're not there yet on rate cuts, we also had other Fed officials publicly signaling that cuts are coming soon. The market heard both messages and leaned toward the doves. That should have been bullish for gold. Lower rates equals weaker dollar equals stronger metal prices. Gold just sat there melting like an ice cube in a cold drink. That's a problem. And not just for gold bulls, as it tells us the market either doesn't believe them or it's already priced in gold and gold is already out of gas. Either way, silver didn't flinch. And that tells a very different story. Silver's not reacting to the noise, it's tracking something deeper. Reason number 3, silver Comex shows support and smart money isn't being shaken out. Remember, we talked about separating signal from noise. Well, we also have to separate signal from sentiment. Chris from Arcadia Economics pointed out this week that Comex open interest, basically the number of active silver contracts, continued to stay strong, meaning that there weren't any signs of major unwinding or a fear-driven flush. This means those longs, the people with the big chips, didn't leave the table. The action seen on the Comex seems to be more about traders managing risk, not abandoning the silver trade. And that matters because smart money and big money don't bet on hype or narratives. They bet on setups, on structure, on quiet pressure building under the surface. Like they know something is coming, which is reason number 4 and the most important of all the points. Reason number 4 requires us to zoom out a little bit so we could take in the big picture, which is a strong possibility of stagflation. We're not just dealing with a sluggish market, we're facing the return of stagflation. Now, Powell didn't say it directly, but let me share some quotes and you tell me. Powell said, quote, economic growth has slowed from earlier in the year. Inflation is still running above target. The labor market remains strong and tight, but job growth has moderated. The Fed is being, quote, careful and not rushing to cut rates, even as other members signal that they're ready. What type of situation did he basically describe? Slowing growth, persistent high prices, labor market is weakening. That's stagflation, whether he uses the label or not. When growth slows but inflation doesn't, it's a nightmare situation. Larger because, as this slide shows, regardless of a recession or a stagflation, equities sell off. But this is like fertile land for silver. The key is understanding that the Fed's dual mandate, right? Full employment and to control inflation. During a typical recession, we see unemployment rising and inflation falling, which is where rate cuts can help the recovery by stimulating economic growth as well as inflation. However, you can't exactly do that in an already high inflation environment. This is Powell's predicament. Cut rates, reignite inflation. Do nothing and watch the economy wobble, if not potentially crumble. Stagflation is very different from recession, and that means silver may not see as much of a drop in industrial demand, while it is also at the same time experiencing greater investment demand. Take a look at this chart, and if you're a hardcore silver bug, I'm sure you're sick of me showing you this. However, this time you're going to love it. I've repeated over and over again that silver gets whacked in a recession, and that's true except for a blip during the 0709 recession. But look at the two times at the top, and the dates were from the 70s. And what was going on in the 70s? Say it with me, stagflation. And notice what platinum and palladium did during those times. Platinum loves a high inflationary environment, which may also speak to why we saw such a significant price breakout after trading under $1,000 for almost a decade. Even during stagflation, demand doesn't evaporate. It stays a little bit sticky, but the translation for us is inflation keeps silver's role as a monetary hedge alive, and while weaker, industrial demand provides additional support, giving silver almost of a 1-2 punch. Reason number 5, which we just covered in some ways, is the move we witnessed in platinum. So let me add a quick couple of points, particularly as it relates to behavioral finance and investor psychology. Most people miss platinum's breakout. Even though I've been hinting about it for like 18 months or so, they missed it because one of the biggest traps in behavioral finance is recency bias. People anchor their expectations to how platinum used to behave. So when it actually moved, they downplayed it, they doubted it, and they ultimately missed the big move. And now silver is doing the same thing, quietly setting up. And that same bias is lingering. But since a lot of stackers are experiencing FOMO and regret from platinum, we are less likely to see investors run from silver, but instead be more patient and unwilling to unload their silver because they're afraid they will miss its move. Since they're also afraid to be wrong again, they're holding on tighter, which is providing more support to the silver price. Nobody wants to be the person who missed platinum and then the silver moves after holding on to it for so long, which actually leads to point number 6, which is $35 silver isn't just a number, it's a line in the sand. Stackers have waited years to see silver cross over 30 and hold, and we've been told for years that $35 silver was a magical number, and that once it crossed over 35, it could run to 50 almost overnight. While from a charting perspective, that isn't off base, the movement beyond 35 is also highly dependent on how silver got to and got through $35. Based on the chart pattern that we've seen, silver is doing exactly what you would expect. It's consolidating, catching its breath, so to speak, and recharging its energy so it can make another run. For investors, $35 has become more than technical. It's emotional, and more importantly, it's become psychological. What we are seeing right now is anchoring bias in action. Investors have latched onto this price level and have mentally flipped it from resistance to support, even if the fundamentals didn't change overnight. Think about it. Nobody wants to sell at 35 because they're anchored to 50 as the next stop. This mental floor, that fear of missing it again, along with loss aversion, has helped keep silver elevated at this $36 level, even as gold has been flat for the last month. A reminder, loss aversion is when people would rather do nothing than risk being wrong. Here's the good news and a major, major warning. Anchoring bias is very powerful. And right now, it's holding 35 like concrete. But if it does break, expect silver to fall quickly to $32. But you need to buy on the way down because the snapback will be vicious as savvy investors are just dying for one more flush out. Point number 7, delayed perception. And this is where price charts and narratives start to go silent. That silence is strength, not weakness, and often the real signal. Platinum didn't make any noise. It looked like it was quietly moving between its normal range, and then boom, silver just might do the same thing. In fact, I want you to think of silver like a bomb going off in the distance. You might not hear it yet, but if you watch closely, you've already seen the flash. And by the time the sound hits your ears or the price chart shows your eyes, that move will already be in motion. God bless Wall Street silver and the apes, but this is how real breakouts happen. Not with noise or hype up front, not with catchy slogans, but with quiet accumulation, smart money positioning, and a slow build as the lit fuse moves closer and closer to the bomb. Joe Public is waiting for the loud explosion to take notice, waiting until silver's move is more obvious, not understanding that it will be too late for the easy money move. Meanwhile, you've been watching silver quietly hold its ground. You've already seen the flash. Now it's just a matter of time before the boom. So are you watching the wrong metal right now? Because while gold has been hogging the spotlight and platinum just stole the headline, silver's been quietly writing the next chapter. In the comments, do you think silver's resilience this week is the first clue of what is to come? Do you think stagflation could be the tailwind nobody's priced in yet? How are you positioning your stack right now? Are you watching and waiting, or are you continuing to accumulate? Or just put an A plus in the comments if you received any value from this video, want to support the channel, or simply want everyone to know that you always stack smarter and never stop learning.